Good evening, guys. It's Saturday, February 11th. My name is Dave Coker, and this is Talking About Finance. And oh my God, this is so awesome. I'm so incredibly excited to be speaking with you this evening. A night of night, and a week of weeks, and a month of month in this year of years. We celebrate a return to normality. Interest rates are higher now. The era of free money is over. That period which distorted so much, which cost us so much, is gone. It's done. It's dusted. And we don't miss it. We don't mourn it. We don't want to see a repeat. Not only did it distort asset values, it damaged expectations. We've got an entire generation who entered the markets on a false premise. Just buy stocks, any stocks. All stocks go up. They always go up. Well, when the cost of capital is zero, when the price of money is zero, this is possible. But in the real world where we live, everything has a cost, and money is no different. And now we're going to be rewarded much more than we were during the era of free money for our diligence, for our adherence to principles. We're cash flow investors, connoisseurs of capital. We buy stocks, we buy property, we buy royalties for cash flow. We pay money, we expect money in return. And this is our time. We've got the assets that pay us to hold them. The entire world is now embracing our view. This is our time to talk about finance. And last week, the S&P 500 finished down about 1.1%. One sector, energy, was up. 10 sectors fully down. And not only that, we see 4 sectors underperforming the S&P 500, specifically materials, real estate, consumer discretionary, and communication services. Energy was a big surprise, but it was no surprise, considering the news that Russia put out about cutting oil production. The VIX traded up to 19.94. It started the week at 18.33. Still, it's a disturbingly complacent view, in my opinion, and in the opinion of many of my friends, about the markets. We're just going to leave that here, but be aware, guys. Bear markets aren't over until we see a blow-off and a spike in the VIX. North of 30, closer to 40, the better. So we're just going to wait here. The 10-year note closed the week at 3.74%. It's down about 20% week on week. It's up about 20% week on week and down about 20%. Oh my God, listen to me go. It's up about 20 basis points week on week, down about 20 basis points year to date. Oil closed the week at $79.79. It's up about 8.7% week on week. Nice boost there. Now it's down about 0.6% year to date. So I bought Ripple and Bitcoin yesterday, as I do every Friday, using cash from the rental properties, other people's money. It's something I've long advocated in this series and just verbally meeting with people that everybody do. But aside from that, let's see what me and my buddies, about 50 or so money freaks, investment bankers, talk about all week on a private Telegram channel. As you know, if you like the kind of stuff I like, you'll like what I'm showing you now. And if you don't like it, have fun staying poor. This, my friends, is Global Wall Street. 7 slides for 7 days. So let's go. Oh, and first up, you got to wonder, the TA guys are sort of all over the place with this, right? I'm of this opinion myself that there hasn't been really a confirmed breakout. We're seeing a rally. Sure, it's a very profound and very strong rally in some circumstances, but maybe it's a trap. Have you ever thought about that? Be very careful about chasing returns, about chasing a rally like that. It's really wild that the TA guys got so many ways to explain this stuff. And I've talked before about TA. Now, I don't disbelieve it. In fact, in my doctoral studies, we did talk about TA a great deal. It's a very good trading signal. But guys, it's gotten out of control. There's a lot of people that can't do a quantitative analysis. Oh boy, can they chart? And they put together these charts and they're increasingly complex and they need page after page to explain the chart. No, the way I learned it, charts, TA, are supposed to be simple. Not supposed to be convoluted with patterns within patterns within patterns. My God, that's total BS. And still, we hear these stories. The old expression about everyone's a guru in a bear market never was more true. And this happens a great deal. We hear about these self-appointed gurus that raise a whole bunch of money from family and friends, and they invest it, and they foolishly promise, as in this case, this is off The Moneyist on CNBC, a 10% absolute return. And now this gentleman's being sued, and he doesn't have money to live in, he's almost homeless, and yeah, he's got a problem. And unfortunately, guys, this is what happens. I blame the people around this individual. This individual might have had a $50,000 problem or a $5,000 problem if people didn't believe their bullshit that there's some kind of stock guru and gave him a bunch of money. That's a bucket load of money. Not really sure what's going to happen to this guy. The article is pretty interesting to read. He signed promissory notes, and yes, in the business we say you're screwed. Sorry about that, but yeah, it's a real problem. And what about this rally that we're seeing? I wrote an article on for my market research paper for my banking clients, and I translated it into a much shorter piece on Medium about these AI stocks booming. And I did another one just yesterday about AI crypto just booming. It's absolutely incredible what's going on. Seriously, look at these returns. It's all bullshit, guys. And we'll talk further about that in the weeks to come. And we've talked about gurus before, about authors before. Talked about them last week, and this is a really good one. I caught this one. Somebody sent this to me after I did the podcast or the YouTube video last week. And yeah, this is quite true. How many times do you see somebody on Twitter or Medium or other social media wisely profounding about something, and then they finish with, for more details, check this link out, or go here, or go there, or buy this, or whatever. It's garbage. If somebody's talking to you about the markets, ask how long they've been in the market and insist to see a LinkedIn. You can check my LinkedIn. I've been in the market since '87, professionally. I was in the markets before then. I don't ask for any money. I just give the knowledge away. Of course, guys, you're all being subsidized by my banking clients. Although, actually, I really enjoy sharing knowledge, and that's why I teach finance and fintech. Not for the money, although who wouldn't do it for 150,000 pounds a year like I'm getting? Did you believe that? I'm not getting 150 grand. No, I just do it because I enjoy teaching in general. I enjoy helping people achieve their goals. And that's exactly why I do it. Their financial goals and other goals that they might have. It's really important to help people achieve their goals. But if somebody's selling courses, they're not on the straight and narrow, as we call it back in the States. They've got an ulterior motive, and I don't accept that they have to eat as an ulterior motive, as an acceptable motive. It's like, get a normal job and just give it away. Because knowledge wants to be free. It's an opinion that I've got. Oh, and here we go. This is so wonderful. If you don't know who Hal Finney is, look him up. Such a wonderful quote. And guys, he's talking about Bitcoins. Each could be worth millions of dollars. I don't get involved in these level estimates. Why do I buy Bitcoin every Friday? I'm asked that quite often. I buy Bitcoin every Friday because I have the faith, I have the opinion. No, I have the knowledge. Bitcoin will be worth more in the future than it is today. How much more? Could be a penny, could be $1, could be $100, could be $100,000, could be $1 million more. I don't care. Because Bitcoin's a really good thing compared to the alternative, which is fiat currency. You can always tell people, we were talking, me and my friends were talking yesterday, was it? We can always tell people who understand Bitcoin, because they realize they don't try to put a figure on it. It's going to be worth 1 million, 2 million, 3 million. They just say it'll be worth more. And yeah, that's why I buy Bitcoin every Friday. And finally, Gary Gensler. Now, he gets a lot of static. Yeah. He gets a lot of static, but still, I got a lot of time for the guy because he's trying to do the right thing. He's like the sheriff that's come into this really lawless town. He's killing everybody left and right. And you think, what a nasty piece of work. And then you realize it's got to be done. And yeah, crypto's out of control. Hate me if you want. We need some regulation in that space. Staking is what he's going after. And the whole premise here, not your keys, not your coins, is one thing that I tell people. Never keep Bitcoin on an exchange. You don't own the keys for those coins. As soon as you buy Bitcoin, get it off the exchange, get it into your wallet. Hardware wallet is best. Software wallet is still a step up on leaving your coins on an exchange. Get it off the exchange. Get it into a wallet. He's making the point, if it's not your keys, it's not your coins, if it's sitting on an exchange, you don't own it, and therefore they are going to regulate it. It's good stuff. It's got to be done. All right, guys, that's it for tonight. Thank you so much for your time. Hope you found this useful. And once again, we're going to have an awesome week coming up. Buy some Bitcoin, buy some gold, buy some silver. If you want to take a risk on, buy some Ripple, buy dividend-paying assets, and just chill. And listen to the screams of the damned, because those markets are going down. Oh, yeah. Take care, guys.